What is up guys, my name is Ignas, welcome back to the channel. Last time with the portfolio update, we found out that there are two market sectors that the portfolio is currently underweight. These are healthcare with a weighting of 14.24% and a target of 16%, and industrials with 12% and a target of 14%. So in November I want to add new money in a sector that is currently underweight, and this time I'm picking industrials. So in the portfolio I currently have 4 different names in industrials, and I would like to add new money into one of these 3 names: FedEx ticker symbol FDX, Caterpillar CAT, and Northrop Grumman NOC. So today we'll be doing a dividend stock comparison and check which one I should be adding money in at these levels. So for the comparison I'm picking 8 different metrics: revenue, price to earnings ratio, trend of number of shares outstanding, current dividend yield, payout ratio, number of years of dividend increases, 5-year compound annual dividend growth rate, and the current dividend yield compared to its 5-year average. We'll check which of these 3 have better results, and then out of this comparison we'll pick a name that new money will be added into. I hope that it will be clear, and early thumbs up is also appreciated, and with that out of the way, let's start. So first part we are taking a look into is revenue. And this is FedEx revenue history of the last 5 years. So revenue growth started picking up steam back in 2020. In the middle of 2021 there was an increase in the year-over-year quarterly growth of 30%, and we saw the largest quarter ever in 2022 at over $24 billion. But afterwards it moved down a bit, and FedEx is currently consistently bringing around $22 billion every quarter. So it's either stagnating or slowly going lower. Now the 5-year revenue history for Caterpillar, the bottom was in 2020, where revenue dropped under $10 billion for a quarter, but since then it consistently have been moving up, and we saw it topping in 2023 at over $17 billion, but afterwards it is moving down and into the red, with the most recent quarter of 2024 at minus 4.19% year over year. So similar to FedEx, we see revenue a bit slowing. Third one, Northrop Grumman. There seemed to be more consistency, and a part of these 4 red quarters by the end of 2021, we've seen a consistent increase in revenue for the last 5 years, going over $40 billion on the trailing 12 months, and over $10 billion in 3 out of the last 4 quarters. Though it seems there has been a bit of a slowdown in the last one, just under $10 billion, still so many quarters are in the green. Now second metric we are looking into is price to earnings. So for FedEx it looks to be quite consistent. We saw it upping to 30 in 2020, then dropping to 15 and even 10 in 2022. But then as earnings per share stagnated and stock price was going up, P/E ratio went to 15, and we currently have it at around 17. So it seems to not be too cheap, but also not too expensive. Now Caterpillar. In 2022 the P/E ratio was at 11, then by year end it jumped to around 30. Afterwards, with earnings per share increasing, P/E ratio dropped under 20, and with both price and earnings per share going upwards, the P/E ratio remained quite flat, though currently we see it closer to 18. So again, not too expensive, but also not cheap. Though what stands out is the third name, Northrop Grumman. In 2022 we had the P/E ratio at around 20, then it dropped under 20 and even closer to 10 by 2022, and remained at similar levels for 2023. Though recently we saw the earnings per share drop, so P/E ratio is now over 30, which is almost as expensive as it has been in the last 5 years. Now third one is number of shares out, so we'll check the first and last quarters of number of shares outstanding and see how much of a percentage that number was decreased. So back in 2019 the number of shares out for FedEx was at 262 million, and with the most recent number we have it at 247 million. So in 5 years FedEx bought back around 5 million shares, which is a decrease in shares out of around 5.7%. Now Caterpillar. In 2019 they had the number at 561 million, and with the most recent quarter in, it is 487 million shares. So in 5 years they decreased the number of shares out by 74 million, which is down on overall shares of 13.2%. Lastly, Northrop Grumman. In 2019 the number was at 170 million, and now in 2024 we have it at 147 million shares. So the decrease is at 23 million shares out, which is lower for 13.5%. Now for the next few steps we'll take a closer look into the dividend metrics, and first one is the dividend yield. So FedEx is currently paying an annual dividend of $5.52 per share, which at a price of $271.57 per share is a dividend yield of 2.03%. For Caterpillar, the dividend is at $5.64 per share, so at a price of $375.49, we have a dividend yield of 1.5%. And then Northrop Grumman, the dividend is $8.24, so at a price per share of $504.57, this is a dividend yield of 1.63%. Now let's take the payout ratio. So what percentage of company's earnings is taken for the dividend payments? For FedEx, currently the dividend payout ratio is at 23.86%. Taking Caterpillar, this number is just a bit higher at 25.41%. And the Northrop Grumman, with a dividend payout ratio of 29.49%. Now years of dividend increases. So for how many years in a row the company has been increasing dividends? For FedEx, they have been consistently increasing dividends for the last 4 years. Now for Caterpillar, it is on a different level with 30 years of consecutive dividend increases. And Northrop Grumman is also not bad with 21 years of dividend increases. Now let us also take a look into the dividend growth rate. So over the last 5 years, FedEx has been increasing dividends for 16.25%. Switching to Caterpillar, this number is a bit lower. In 5 years, they've increased dividends annually for 6.48%. And lastly, Northrop Grumman, with a 7.76% of compound annual dividend growth rate. For the last metric, I'm taking my own watch list. Here we can find information on company's dividend yield history for the last 5 years. And then the current dividend yield is compared to its 5-year average. We now have FedEx open. So we can find that over the last 5 years, the average dividend yield was at 1.66%, and the stock is currently trading at a yield of 2.03%, meaning that the yield is right now higher for 22.37%. Though there has been an opportunity back in 2022 with a yield of 2.42%, 46.13% over the 5-year average, but buying right now is comparatively better to an opportunity that we saw in 2020, where the yield was at 0.89%, so lower than the 5-year average minus 46.26%. So the yield we see now is not the highest we've seen in the last 5 years, but at least it is in the positive, higher in double-digit percentages over the 5-year average. Now let's take a look into Caterpillar. So the 5-year average is 2.09%. And we can find that it is now worse, because currently the stock is trading at a yield of 1.42%. So it is lower than the 5-year average for 31.99%. There was a moment in 2020 where the stock was trading at a yield of 3.5%, with an opportunity higher than the 5-year average of 67.22%. So definitely buying right now at 1.42%. Doesn't look promising to what we have seen in the last 5 years. And lastly, Northrop Grumman. The 5-year average for it is 1.57%, and the stock is now trading at 1.58%. So there is only 0.01% of difference here, with the dividend yield currently being in the green compared to its 5-year average for 0.63%. So we went through the metrics, and I've gathered the results into this table to make the comparison. So the best result here will get 3 points, second 2 and the last 1. Then we sum the results up, and the ticker with the most points will get money added into with this month's cash addition. So for the revenue metric, 3 points goes to Northrop Grumman. They only had 4 negative quarters out of the last 21. Then for the price to earnings ratio, we give it to FedEx, where it is at 16.91, where the ratio is at 16.91, lowest out of the three names, and also in line with what we have seen for FedEx over the last 5 years. Number of shares outstanding goes to Northrop Grumman. They have decreased the number of shares out for 13.5%. Dividend yield goes to FedEx again. Currently the stock is trading at a yield of 2.03%. Lowest payout ratio is again at FedEx at 23.86%. Years of consecutive dividend increases. First time 3 points goes to Caterpillar, where they have been increasing dividends consistently for the last 30 years. Then 5-year compound annual dividend growth rate of 16.25% at FedEx, so 3 points for that. And last one is the current dividend yield over its 5-year average. Currently for FedEx we have it higher for 22.46%, so best one out of the 3 we are comparing. It looks like that FedEx is winning in 5 metrics out of the 8, so it's no surprise that it got the most points at 18. Meaning that FedEx is now considered the winner of this dividend comparison. And this is then the stock that I will be adding new money into with this month's cash edition. So what do you think? Is FedEx a good pick to add money into? Or do you prefer any of the other 2 that we've checked into today? Share your pick in a comment below. Also don't forget to support the channel and leave a thumbs up under the video. Next time I'll be back with a portfolio update, and we'll see what other areas of the dividend portfolio needs adjusting. So that was it from my side, thank you for watching, and I'll see you all in the next one. Dividend dreams building